Today on The State of Us, Gen Z is taking on debt to invest in the stock market boom, and could peer pressure actually be a good thing? Welcome to The State of Us. I'm your host, Justin T. Weller, joined, of course, today by our friendly redneck liberal, Mr. Lance L. Jackson. And today we're talking about one of Lance's things that is near and dear to him, and that is the almighty green dollar. Except in this case, most of what we're talking about is money that never has physically existed, nor will ever physically exist anywhere. So it'll be a mixed emotional day for our friendly redneck liberal. But here's the deal. About 4 in 10 investors say that they have taken on debt to invest, including 80%. That's right, 8 out of 10 Gen Zers and 60% of millennials, according to a recent survey from Magnify Money. New investors in 2020 were much more likely to exhibit low levels of investing knowledge and their more experienced counterparts at 60% versus 44%, respectively. We'll also look at whether or not peer pressure can actually be a good thing. It is possible for it to motivate self-improvement. But before we dive into both of those seemingly separate but also related topics, what is the word of the day?
Are our young friends just practicing capitalism, or are they being avarice? That is our word, avarice or avaricious. AVARICE, 3 syllables. It means greedy, too great a desire to have wealth. And the key there is too great a desire. Are they taking shortcuts? Are they doing things that are unwise or not? Or are they just partaking in the age-old capitalist system and trying to get theirs before it's gone? So that's avarice.
Avarice. I think I can do that one. That one's not too hard to say, and I feel like it'll be easily incorporated into
3
a number of things that we're talking about.
But it's only 7 letters. So
okay. Yeah. So the letter count is lower. The syllable count, we're exceeding 2 syllables, but we'll give it a go. So basically the article starts out here, Lance, by talking about this large percentage of Gen Zers. And keep in mind, this is of Gen Zers that are investing, right? Okay. So it's not 80% of Gen Zers have taken on debt to invest in the stock market. It's of the people that have invested, 80% have taken on debt. Okay. So that I think is an important caveat to note, because obviously it'd be very different if the whole generation was in that situation. But they're not, they're 20% ahead of millennials who are at 60%. And the interesting thing here is that simultaneously, the data also indicates that they are less literate, financially literate, than the people were at the same age, which I find interesting, because you would think maybe on the surface that the rise of access to social media, YouTube, etc., and if you've spent any time on YouTube, you're probably aware that there is a myriad of financial advice available. So on the surface, it would be easy to assume that, well, there's more access to this information than there has been. There is more, availability of it. So therefore, people should be more educated with it. But as we know on this show, right, access to information does not, that's our correlation causation thing, right? Just because you have access to the information doesn't mean that you're going to be educated about it. And there's an assumption there that the information is good information, right? Because the one thing that we also know about YouTube and the internet is that pretty much anybody can put out anything, right? I mean, I think that that's part of it. The other part of that, I wonder too, though, is certainly a change maybe in parenting, and also a reshuffling, which we have talked about, in the way that you achieve your retirement or your success, because previous generations have been able to lean a little bit more heavily on, well, if I if I put in my time, right, between Social Security and probably whatever my job provides, I'm going to be more than fine. Well, we know that a lot of jobs don't provide hardly anything in that regard anymore. Pensions are basically dinosaurs for most people. And as we've talked about as well, the wage situation, they're making less money. So I think overall, the positive, Lance, that I see is that young people are more interested in investing, and the article points that out, than their peers were at the same age. The danger, right, is that they're less financially literate than their peers were at the same age.
Well, you threw about 4 things in there, so I'm trying to figure out where to start.
Okay.
But I'll go back to the initial one, and that is borrowing money to invest. That is called buying on margin. Okay, that means I'm going to borrow money and invest in this stock because my thought is that the stock will go up, and then I will pay off my debt with the extra money that I make when I sell the stock for a profit. And that's all wonderful as long as the stock goes up. And the problem I see with the Gen Zers is they've been alive and paying attention to the stock market at a time when they've never seen it really go down. I mean, yes, you can say, well, in 2019, or 2020, the pandemic and, this and that. But look at it, the way it recovered, and it's just going and it's going and going and going and going. And
well, and a lot of them entered in the recovery.
And guess what? It's going to go down again. And so it's all that when you buy, you're taking a chance. The stock market is legalized gambling. And young people do not or are not willing to learn to understand that concept. And that is the problem that I see when you borrow money to invest. You're betting that you're going to have high returns and then be able to pay off that debt. Then that's going to put you in a bad situation. So please understand that's one of the main reasons for the stock market crash of 1929. It started the Great Depression. Were people buying on margin? The others, businesses were having a hard time supplying goods that people needed. Another was that people were taking on too much debt and they couldn't pay it all off. That's just where I am. Okay. Know what you're getting into. And that's my fear that they're not. Now you bring up a good point. For many of these Gen Zers, Social Security may not be there for them. So do they need to be working on their stock portfolio so that they can provide for themselves and not have to be like great-great-grandpa, and that is work until the day they die? Understand something. There was no Social Security until the Great Depression. That was a way to get the elderly out of the workforce to provide work for young people entering the workforce at a time when jobs were at a premium. What? You mean there hasn't been Social Security the whole time since George Washington? He didn't start that? No, Alexander Hamilton did not start that, okay? That was in the 1930s. So to think that this is always going to be around, it's a misnomer. It's actually been here less than 100 years. So for it to go by the wayside would not necessarily be something that we should be surprised of. And if that's not there, then you need to make sure you have your own retirement.
To your point about Gen Z, for those that don't know, the Social Security Trust Fund is estimated to be depleted unless Congress implements reforms in sometime in the 2030s, and that's also the mid-30s of Gen Z. So there is definitely a reality that the opinion among Gen Z is that Social Security is probably, if it still exists, I mean, I've said this for years, if it still exists when I can claim it, I'm not counting on it being something I can live on, something that's really going to make a major difference, because in order to count on it, you'd have to have huge faith in lawmakers that they're going to pull a rabbit out of a hat, which, stranger things have happened, but also, it's not a situation I would gamble on. Let's put it that way.
If it does continue to exist in its continued form, people who are working are going to pay a lot higher taxes because that's how it's funded, people. Okay. That's how it's funded. If you work, They take taxes out of your paycheck to put it into Social Security system. So for Social Security to continue to exist, not to go down the rabbit hole and change the topic, but for it to continue to exist, then there has to be tax dollars collected.
Rather than dive too deep down that rabbit hole, I do think before we move on, Lance, it's important to note, well, how does the 80% of Gen Zers and 60% of millennials compare to other generations? Well, only 28% of Gen Xers are doing the same, and only 9% of baby boomers have reported the same, that is, borrowing money to invest. At the same time, I would like to add a big old asterisk to this one, which is that if you're asking baby boomers right now if they're borrowing to invest, I would sure hope that the answer is few, because as we've established before, they have, and they ought to at their stage in life, far more wealth, exceedingly more wealth than millennials and Gen Z does. And they ought to, because they're the generation of the American dream, right? And for them, for most of them, it went pretty well if they did what they were sold. And if they were borrowing money, they ought to already have money to invest, right? They probably already have the wealth in place to say, yeah, if I want to invest some more, I can do it. I don't need to borrow because I have that money available to invest. Or I'm not willing to take on debt at this stage in life because of the increased risk.
Or I did without something if I'm a baby boomer, so I could invest. Oh, what a thing for millennials and Gen Z to learn. Live without something and then invest so that you have something for the future instead of spending every dime you have on your hedonistic needs in the moment.
Hedonistic needs. We actually have a Gen Zer today that we're going to talk about that has done just that. Not the hedonistic needs part, but the investing part. I do think it's a general signal, and that's part of what we're going to keep talking about.
Sometimes my point is baby boomers have money because they've done without at a younger age to invest.
Sure. And because as most things are, it's not often, it's rarely one or the other. It tends to be a combination of both. And I think this is the important part of it too. Yes, that is true. Many baby boomers made sacrifices because they were raised to. There was also a system in place that rewarded those sacrifices and made sure that when you made those sacrifices, most of the time it paid off and that you were able to build wealth. And that's still sometimes true, but I'm not sure that it's true at the same rate that it was true before. So we still have to talk about, though, Lance, one Gen Zer who's going against the trend, why Gen Z is reevaluating careers and how that's affecting their investing strategy, and why the Bank of America says that Gen Z will be the most disruptive generation ever. How's that possible? Well, to find out, keep it here on The State of Us, and we'll be right back. So we talked about that 4 in 10 investors today have taken on debt to invest. That's overall. But 80% of Gen Zers have done it and 60% of millennials. By contrast, only 28% of Gen Xers and 9% of baby boomers have done the same, are doing the same, at the time of asking the survey. So part of why this is happening, right, is that Gen Z is reevaluating their careers. And the article from USA Today says the following, which, by the way, you can find linked at thestateofus.org. Gen Z can more easily access the stock market and other investments than previous generations with the rise of online trading platforms like Robinhood. And those workers are starting to save for retirement at an unprecedented young age, according to the Center for Retirement Studies. So one thing that is important to note is that they are investing younger, which we've talked about on this show for years, and many people have always said the sooner, the better, right? The big difference is, and you mentioned this before the show, Lance, right, is that they're not generally seeking professional assistance in that investing. they are attempting it on their own. And no doubt one of the reasons for that is that many traditional financial advisors, or at least up until recently, have diverted clients away from the new trendy investments, right? Like cryptocurrency. And if you're a young Gen Zer, you're probably interested in investing in that, which means that there is a issue there, right? What you want is not something that somebody's willing to recommend. So what do? You ignore the recommendation and you find somebody who tells you that you should.
And I'm not worried about Gen Z's avariceness. Okay. I don't think that they're being greedy. But what I'm concerned about is, do they understand the risk that they're taking? And maybe that's the definition of greed, right? You want it so badly that you defy the risks. And so I don't think they're going after it because yes, they want a lot of money, but like you tried to point out there, I do think they're trying to invest for their future because they realize that Social Security won't be around, but are they taking unnecessary risks during a time because they don't understand the ebb and flow of stocks? We don't know what the outcome of cryptocurrency is going to be. And so do they understand the risk that they're taking? And they could lose everything. Does that even matter to them? Well, if I lose it, I'm going to have to work my entire life anyway, so it doesn't matter. I'll take advantage of the next boom, and I'm okay with this boom and bust cycle. So that's my concern. Is it avarice? Are they being greedy, or they just don't understand the entire system?
I'm not sure how much avarice plays into it, simply because I think one thing that's important to note with Gen Z, as we discussed a few months ago, we did an episode on the pessimism of this generation. I'm not sure that it's I want the boom and bust cycle. I think it's their pessimistic acceptance, whether or not it's true. They accept the reality that they believe to be true, which is that nothing can be done about this, or the people that can do something about it aren't willing to. So again, from their standpoint, what these old people are preaching to us is wrong for us. It may have worked for them, but it ain't going to work for us. And so there's no reason to listen to them on all these lovely financial investing tips when what they're preaching to us worked for them, but we know the world's a different place and it's not going to work for us. And again, I'm not saying that's true or not. I'm not taking their side. I'm saying I think that this is part of the thought process, okay, that is going into making that decision. I think it is, for them, they believe it is an acceptance of the situation, which we also indicated in that episode they're more likely to do, right? They see the world as a less hopeful place. They're not as patriotic as past generations have been. And all of those many things, again, right, wrong, or indifferent, go into this general view of, to Lance's point, right now, if I don't do anything, I'm going to have to work until the day I die because the previous generation screwed up and they did not leave me what they were promised, for whatever reason, it was a systemic issue. They had too much avarice, whatever. However you want to chalk it up, they have accepted that is the reality, right? And so they have accepted I have to work until I die. So why not take the chance? Why not? Because the worst thing that happens is that it doesn't work out, in which case I'm working till the day I die, just like I have to right now anyway. So I might as well claw and grab and scrape the money, and borrow it and take it from whoever will give it to me, by the way, which is like 28% of those loans that the Gen Xers are getting are from friends and family, which is a whole other dichotomy that has to be considered, because I might as well try. It may not work out, but it's definitely not going to work out if I don't give it a go. And they also, have that belief because their pessimism thing again, right? Going into the whole, I can figure out how to beat the system if other people have figured it out. There is more access to more information. I can do it. I can beat the system and I can get out. I can exit the rat race. And you hear, more stories about that nowadays. I'm not sure that there's more people that are actually getting it done, but the access to the stories is more prevalent. There are lots of, just look up millennial dividend investor on, YouTube, and you're going to find infinitum videos about how to invest on, stocks that pay a dividend and how some people have managed to retire at 30, 35, 40 years old by doing that. And the big caveat that I think that Lance brought up in the first segment is the common thing with those people who mentioned that they sacrificed way more than most of us are comfortable sacrificing for 10 or 15 years, Now, for them, it was worth it because now they're living a certain way, but they're also, most of them aren't living high on the hog either. When you look at how they're living, the biggest thing they gained was freedom over their time. And it depends on how much you value that. That's the biggest thing they gained because they don't live, most of them, in multi-million-dollar mansions. They live very affordably. They still budget. They pay very close attention to their investments, and that's the only way that lifestyle can be sustained for most of them. So
I think you're exactly right.
It goes back to that get rich quick thing, right? Which we're all susceptible to. Everybody wants to do that, but it's not necessarily possible.
On the positive side, it's nice that young people are this interested in investing. I think that is my biggest takeaway here, is that all of those years of me preaching in class that it's never too early to start preparing for your future is starting to be recognized by this younger generation. And I think that's a really positive thing to build on. And I think that my only concern is that not that the future is going to occur like the past. I'm not saying that. I'm not saying that history is going to repeat itself. But what I'm saying is the more information you have when you make a decision, you tend to make better decisions. I will stand by that claim. It doesn't mean you always make the right decision, but you are more likely to make a good decision the more information you have. So I'm not upset that they're interested in investing. I'm concerned that they're not getting all the information that's available out there. And I'm not saying that they go to a trusted advisor like I use, but to your point, on the internet, out there in techno world, there is all kinds of good information, and they need to sort through and get that so that they can continue or start to make wise decisions. And I don't know which it is, because some of them are, as you point out, making good decisions and have done really well. And others, I'm afraid, though, are after that get rich scheme or following some advice that maybe is a little shaky and will end up hurting themselves for decades.
As a millennial, I guess I would just note that, and I don't know if this is the right thing or not, I'm just sharing with people, this is what I've done, and I feel for me it was helpful. When I started investing, which was like a couple days after I turned 18 years old, crypto, wasn't a thing then. So it wasn't an option. So I guess I can't speak to that point of it. But I invested first in just one mutual fund, because that's all the money I had in the world, was the buy-in fee. Like, that's it. I couldn't diversify, because I didn't have that. So I just invested in the one thing that I could invest in that I had saved, enough money to afford the buy-in for. But as time went on, it took until probably just 2 or 3 years ago, I only had, like 1 or 2 mutual funds at a time and a handful of stocks. And no, I never received any professional advice, but everything that I invested in outside of mutual funds, every company, were companies that I was familiar with. And I'm not saying you have to do that. I don't know if it made a difference, but it made me feel better about investing. One of the companies, which I've talked about before, is Microsoft. I use their products literally every day, And I follow everything that they're doing, what they're releasing, what they're working on. I try to. I mean, granted, they do so much every day that I'm not sure any human could actually keep up with everything they do, but I try to stay relatively more informed than your average person on them, And I think that that's helpful. It doesn't always mean that you're investing in the very best companies, but if you're not going to seek professional advice, then you should at least invest in things that you understand, or feel like you understand, if nothing else. If you just invest in something random because somebody told you that you ought to, that can be really dangerous, But that's, I guess, would be my advice. Find a company that is successful, that you like and use, and invest in that company. And that way it's something that you're naturally going to want to pay attention to, and you're not forcing yourself into it. And then as you get more comfortable, as I have, I don't think there's anything wrong with taking on, other stuff that you maybe don't understand, but spend the time to research and understand. But again, to your point, Lance, I'm not sure that most people are doing that right now. I think they're just looking for the quick, which is human nature. They're looking for the quick. I don't own any crypto, just being honest with people. It's probably a mistake. I think I'm getting to the point where I'm going to be comfortable doing it, but I know somebody who turned 18 just recently, and one of the first things they did was buy crypto. Again, not a financial advisor. To me, that seems like an odd place to start, given the volatility of it. At the same time, they're young, so they can afford that risk, If they put $20 in crypto, I'm not sure that it's the end of the world one way or the other if they keep it or lose it. So what about peer pressure though, Lance? How does that play into this? Are they investing just because that's what everybody else is doing? And if they are, is that necessarily a bad thing? We've all been told it's a bad thing, but is it? To find out, keep it here on The State of Us, and we'll be right back. Peer pressure can be good. Claims an opinion commentary piece from the Wall Street Journal. And this guy, slightly older gentleman, is part of a self-improvement, physical exercise group. And he claims that notion that we've all been taught over the many, many years, Lance, that, peer pressure is just evil, has actually pushed him to be healthier and to work harder and to do better. So is peer pressure just black and white, good or bad? Or, as this article seemingly, common sense wise points out, it can be both. And it just depends on the context and the end goal of it.
Well, he's in a running group because he's getting older and he wants to try to stay healthy. And part of his group's called Father Time Challenge is to do the distance running, which is the part of his workouts that he least enjoys. But he said, by running, it gives me time to think. And he said, what occurred to me is the quote, don't give in to peer pressure. That adage that I grew up believing is wrong, or at least is incomplete. The lesson should be, if bad peers are applying untoward pressure, find better peers. They're out there. I love it, okay? Because I think peer pressure has gotten a bad rap because it's about who you surround yourself with. If you surround yourself with good people who are doing good things and making good decisions, then that pressure that's being put on you by them, which is peer pressure, right? Because it's the group you're with, can be beneficial to you. But if you're hanging around people who are making bad choices or doing negative things and you join in because you feel the pressure to join in with them, then you find yourself in trouble. And I think that is the way we need to look at peer pressure and understand, right? The age-old adage we say here, it's never, never, and it's never always, right? That peer pressure can be bad, but it can also be good. It's never,
never, never, and never always.
Right. So,
yeah, that's a tough one to get right.
But he talks about seeing people that, he talks about, he's got a heavier set friend and he goes by him and, running up the hill, and he goes, well, daggone it, if he can do it, then I can do it. And, it helps him finish the run. He also says that, he's got another guy that they call the auditor, who his job is, he never cuts any corners, that he does what's supposed to. If we're supposed to do 10 sprints, he does 10 sprints. He doesn't do 9 sprints and then tell everybody, yeah, I did 10. He does what he has to do no matter what. And he quotes one of my favorite coaches of all time, UCLA basketball coaching legend John Wooden, who said, quote, the true test of a man's character or a person's character is what he does when no one is watching.
I think the key is to apply our 2 W's in this situation, which is a who and a what. Who is pressuring you and what are they pressuring you to do? Okay, because I think both of those can be relevant alone and together, right? I mean, to Lance's point, if it's a questionable group of people pressuring you to do questionable things, then yeah, peer pressure is bad in that circumstance, right? But you could also have, a good person pressuring you to do something bad. Still bad, right? Peer pressure is still bad then, just because they're successful and they want you to do something bad doesn't make it good. So I think the key is maybe even more so than who is what are you being pressured to do, and is it something that you actually want to achieve? Like, for example, in this guy wants to be healthier, right? He's in a group for running. So there's an assumption here that he cares about his health. He made the decision to be in the group. Now, if while he's in the group, they pressure him to be healthier. And I think a key here is this is indirect peer pressure, right? Mm-hmm. This guy didn't walk up to him and say, you suck, you got to run harder because I'm fat and you're not. And, how can you be behind me going up the hill? That's not what he did. He just passed him on the hill, doing his own thing. And it's almost like it's secondary peer pressure, right? Nobody came up to you and was berating you. It was just the nature of being around other people who were doing things that you also wanted to achieve, pressured you to do a better job. That's totally different than I think what comes to mind when most people think about peer pressure and when they say it's bad, which is what they think of as some group of teenagers who pressure somebody into going out and, drinking or trying a drug or whatever, That's, I think, what comes to mind. And obviously that's totally different than this situation where somebody's getting healthier through indirect peer pressure, right? So like most things we talk about, I think it goes to the key of how they're being pressured. And when we apply this, Lance, to Gen Z and their investing, this is, I think, where it gets interesting, because what you had left off at the end of the last segment and talking about was this idea that it's a big positive, right? That they are more interested in investing than previous generations and are interested in getting involved at a younger age. And I think that a lot of that comes from peer pressure, right? And that's not just people their own age, because I think we tend to assume that, a peer, for example, is only somebody of the same age group or somebody that you work with. But, peers don't necessarily have to be the same age, right? They're people that are in your immediate circle.
Well, it's the point people you work with.
Yeah.
Because your boss is probably older. I mean, unless you work in a startup company or of some sort. But, or your family, right? Mm-hmm. Can be a peer group. Mm-hmm. And, grandpa's sitting there at Thanksgiving dinner or whatever and has been talking about investing and how their investments are doing and what he and grandma are going to get to do after Christmas, over the New Year's, where they're going and where they're traveling because of the money that they've invested and now has earned enough that they can do that. And then it puts you to thinking, oh, well, maybe I would like to do that when I get to be the same age as grandma and grandpa or whatever. And so you start to invest. There's positive peer pressure. And, I know you're listening to this show and, it's after Thanksgiving and you've heard some of that. And it's like, I'm thinking of doing that next year. That's an example of positive peer pressure from people who aren't your own age, but you listen to people that you respect, peers, and are going to do something because of that.
Yeah. And that's the trick with investing, right? Is not allowing yourself to succumb to, like this article said, and this guy pointed out, applying untoward pressure to do things that you're not comfortable doing. If you're listening to 20 YouTube videos from people you've never met and they're all pressuring you to invest in dividend stocks, but you don't feel comfortable doing it, then you probably shouldn't do it. Now, if somebody that and trust and has given you some advice before financially and it's worked out says, I think you need to take a look at this. Here's some resources to look it up. And if you want to do it, I'll be happy to help you. Technically, they could be both forms of peer pressure, right? But there's a big difference between those two. And one is sometimes people need a little pressure, right? But the right type of pressure. Because as we know, if you confront somebody and you berate them, very unlikely to have a positive impact at the end of the day. You might get somebody to do it, but it's for all the wrong reasons and it's probably not going to pan out. And you're probably doing it on something that you shouldn't be doing it on anyway, right? Usually when that happens, it's the bad types of peer pressure, if that's the approach that somebody's taking. So I think peer pressure certainly plays into investing and what people invest in, but it doesn't have to be bad. It can be a good thing. And if society has pressured Gen Z into becoming more aware of investments at an earlier age and considering investing, that part of it's good. Investing willy-nilly and not having the financial literacy, that part is bad. So why do we have this conversation today, Lance?
Well, because we just like to talk, but we also have a mission here.
Fair enough.
But
pretty much sums it up.
We have opinions and we like to talk. But here, and True Chat's given us the opportunity to do both, to talk and to share.
So it's
our
not
opinions.
just out of avarice.
No, not at all.
Avariceness.
Not at all. No.
Okay.
But basically, the company we work for, True Chat, has a mission, and that is to educate people by providing honest, open, and respectful conversations. And we've done that today, talking about generational investing as well as peer pressure. And hopefully you enjoyed today's show. And when you're talking with others within your peer group, that you are giving them the knowledge that you've gained. And they say, well, that sounds like a pretty interesting show. Where can I find it? And you say, well, as a podcast, you can find them on Spotify, Overcast, Stitcher, Apple Podcast, and everywhere podcasts are found.
State of Us is available Tuesdays and Thursdays as a podcast first thing in the mornings, and you can find us on AM and FM radio stations around the country on the weekends. Today, I have it as a close heat. I don't actually have a definitive. I mean, I have me as up by 1, but I'm not trusting that that's the case. So,
okay.
Where's your count? I don't see it written down anywhere. It's up in that old noggin.
Yeah, I had me at 5-3, which is why I didn't say a lot of avarice at the end. I wasn't being greedy there. I thought I already had the win comfortably in place.
Didn't want to pound the opposition into submission.
That's okay. It's just for fun, and hopefully the real isn't for winning or losing, but it's for people improving their vocabulary skills.
Hopefully that's happening. Let us know. Send us an email, podcast@thestateofus.org. And if there's something you'd like us to talk about that we haven't, we'd like to hear from you. For the State of Us on True Chat in Urbana, Ohio, I'm Justin T. Weller.
I'm Lance Jackson.
Special thanks to our producer, Bradley Butch, and thank you all, our audience, for tuning in. We'll see you next time. Be the change. Be sure to check out our website, thestateofus.org, for books, articles, and all the ways to tune in. thestateofus.org.